Welcome back to the channel, family. Listen, came to bring you guys some game before the weekend ends. This is your halftime show edition, your midway market update. So you go into the next week sharp and not surprised. Real quick, if you've been getting value, smash that like button, share this video with somebody who trades emotional, and make sure you subscribe so you don't miss any future drops. All right, listen, let's lock in. We got some market movers. All right, this data could be some market movers. We got the PMI. We also have the PPI next week with a couple of Fed speakers. All right, unemployment rate change. All right, so you want to be aware of these data points, all right, next week at certain time frames, because they will be market movers, especially that December 3rd. All right, now let's hop over back to the charts. You guys, I tell you, it has been a crazy couple of days, right? A crazy couple of days. Not only did we get the earnings from some of these prominent companies, but we also got these explosive moves from the market right here. All right, SPY, I'm talking Nvidia, all right, Reddit, Amazon, Google, all right, Bitcoin, all right. All the dips have been getting bought up, and I prepared you guys for it on these future videos. You're going to start realizing that I'm really kind of tailoring you guys to see opportunity. And if you've been watching my videos, thank you. I really appreciate you guys. I really do appreciate you. So those videos prepared you for these future movements. For these movements that you see right now. All right. And what you have in front of you is SPY. And the market is about to close. We have about 15 minutes left on the 26th of November. And it's been a wild day today. Now, I informed you guys on a previous video that we wanted to catch a pullback, right? That we didn't want to chase, that we wanted to catch that pullback. And we got that pullback, all right, double bottom here. Price got bought up here at these previous levels. Okay. During this trading day. All right, now if you're tuning in with me, I'm going to carry you real quickly over here before I get into the meat of the video, because I want you guys to understand things that are happening for the holidays. All right, this is the holidays spending right now. All right, market moves. This is what you want to know. Now, we had a previous demand level here on SPY. Price has since then broken out. Okay, we gapped up. All right, causing a continuation capitulation, right? All right, profits are being took. We come back and we hold the 21 EMA. All right, so we didn't quite fill that gap, but we held here. We created these higher lows. You see those higher lows here? Okay, we created those higher lows, and we continue towards the upside until we seen a little bit of turbulence here. And we've been consolidating all day on the SPY. So we went into a trend inside of a narrow range day. All right, a trend inside of a narrow range day. All right, and that's what we have all day today. All right, market just worrying. So I'm looking to hold calls into the weekend. All right, this is not financial advice. I am only a coach and mentor. However, all right, the high time frame is suggesting more upward upside. We also have taken out, that's right, we took out some of that resistance that we've seen in the past couple of days and couple of weeks, where we just could not get past 670. We couldn't get past 665, and it just didn't happen. All right, and so we're running into some more resistance, but we have broke some resistance in the daily and the weekly time frame is trying to reclaim, as well as the monthly. All right, that's what you see here. Now let's travel over to the daily. All right, you guys got to understand, it's getting ready to be, turkey day for some. You're visiting your family. We all out here spending money. We kind of distracted. All right, we're traveling. These are the kind of stocks that are going to move, and we do have a technical break. And just to show you what I mean when I say different stocks are just booming, listen, take for instance Kohl's. All right, Kohl's has been going parabolic, almost hitting our targets here that we called out inside of the Discord group. All right, KSS, Tesla, SPY, Google. These are some of the call outs that we call out in our chat, so folks are able to get in ahead of the move, so you don't have to chase. You just get in position with us. We teach you how to open up a brokerage account. We also teach you how to place the order. Right, it's about order execution, and you always wanted to predefine your entry, your exit, and your risk. All right, so like I said, these are one of the stocks. All right, KSS. All right, we've been in this stock since 15, 16 bucks. All right, also Bitcoin has been doing its thing. You see parabolic moves. All right, the market has been getting bought up. In the future video, in the previous video, speaking about it now in the future, I put out a video about Bitcoin and how the banks were buying. Right, the banks have been buying Bitcoin, XRP, Solana, right? But they weren't heavily buying the SPY. And now you get these block orders that come in, and the banks are accumulating. So what do you see? You see big move down. All right, that's because the institutions, right, they rather die than to buy higher prices, and so they hit the bid on the market and they try to get a lower price, right? If you go to the store and you want to buy some of your favorite groceries, of course you're going to always want to go with the prices right. All right, and so that's what you see. Now we could get some gap fills. All right, there's more gaps to be filled down here. We have been moving up, and we have the market imbalances in about 1 minute here at 350. So there's no telling what we're gonna do. You already seen that the higher time frame is showing us some momentum. All right, and so these are some of the things you want to watch for profit taking into the season. All right, the holiday season. All right, Bitcoin look like it want to give some up. Okay. All right, so we could possibly be seeing some sell-off into the holiday season. All right, the market is actually closed tomorrow, and we're going to be open up and running back on Friday. All right, so first thing first, SPY. Because SPY been moving like it's trying to prove a point, we got that breakout that we talked about. Okay, you see that in front of you. That's the breakout. We broke out. All right, so this pullback gave us opportunity, and now you see the weekly and the monthly that I'm going to show you. You're going to see that the weekly and the monthly levels are getting reclaimed. All right, now this is where a lot of people get trapped, because instead of taking advantage of companies at straight up discount prices, they panic when the market drops. All right, they chase puts, they try to sell the market. If this is your first time watching, yes, you can make money when the market falls. It's called a put option, PUT option. All right, well, they sold really late. They jumped in early. They jumped in late. All right, and they reached instead of prepared. All right, that's what happened. They just reaching for a trade, hoping for a trade, reacting to candles. That's not the proper way to do it. Understand this: when SPY reclaims major time frame levels, especially in a low volume environment, which is what you got today. Now we're gonna go. Let's go to the monthly. As I'm telling you this, today was a low volume pump. All right, we pumped off a low volume. I'm gonna clean this chart up for you so you can see where we are. We are heavily extended away from the 21, but we've seen heavy momentum today, and we are still above the 72-day moving average and also the 100-day moving average. So there's obviously some dramatic bear versus bull commentary all around the world. Trust me, all the chats, but clearly you want to see price breach these previous levels. Okay. I'm going to use the weekly time frame. We don't have anything on the chart, but the Bollinger Bands is what these red and green line is. These are Bollinger Bands. All right. And the gray line is the 21-day moving average. All right. Okay. And we have breached the previous candle here on the weekly. See, we breached that. All right. What does that mean? We're taking out levels, all right? That's a sign of momentum, all right? We're trying to reclaim some of the levels that we reached before on SPY. That's where the momentum is coming from. You understand what I'm trying to tell you? So, especially in a low volume environment, all right? Look at the volume. We pumped on this volume. It's not even blue bars. This is my volume, right? It's not even pumping, really, on low volume. So, while you're thinking, it's dumping, the big money is over here quietly loading up, that's why your puts get evaporated like nothing. All right, so a lot of this ties directly into holiday psychology. All right, during the holidays, people focus on changes. The spending goes up, traveling goes up, the stress goes up, right? I'm a parent myself, I got family, so we travel, money is being spent, food is being cooked, but attention on the market, that goes way down. It goes way down, right? And so there's a portion in the week before the week happens where you see low volatility or high volatility, but the direction is towards the downside on SPY, and you get these movements, right? That movement is the setup, right? All right, to get discounted prices, people paying for things before the holidays. They bought that dip, right? They bought into the fear. You understand? I want you guys to see something to understand human behavior. That's what it's about. Human behavior. So we're going to look at the fear and greed index. All right, bear with me as I navigate this screen. All right, the fear and greed index tells a whole lot. All right. Okay, right here. We're at 19. Now, we were at 11. All right. It's a couple days ago, right? And now we're at 19. And when people are fearful, you're supposed to be greedy. And when they're greedy, it's supposed to be fearful. This is a time to buy. We spoke about this on previous videos, all right? The fear and greed index, all right? Add it to your list of things to understand and study, all right? Now, back to this chart, all right? Now, you can clearly see the fear and greed, right? So the fear, you see the fear, right? That's the weekly. Now let's go to the daily. We're going to check out the daily. All right. Now, here's the daily time frame. Last week there was some news, right? People were saying we were going to fall. You guys remember all of the talk. You seen the headlines. You felt the energy, right? But like I said, the dip was getting bought up, right? As a technical pattern, we are bullish overall on a high time frame. Now that we're reclaiming some of these levels, you see how we've broken this structure here, okay? That's what you see on a daily time frame. Let the bears try once. Let them try twice, all right? A 2-try failure, once and twice, all right? Now, what does that mean, all right? This is number 1, and this is number 2, because the bears tried to bring the market down twice and they got trapped. And this is what you see, a bear trap, okay? Holiday traps, market movements. This is what's going on, all right? The people are getting trapped. It's human behavior. This is a technical pattern. It doesn't always show up like you want to see it or perfectly, but there's all sorts of type of patterns all over, and this is just one of them spotted, and I'm letting you know, SPY is trying to reclaim the highs while everybody's asleep, right? The market is closed tomorrow. It's closed for half a day. Friday, next week we get in, we get what? We get a new month, all right? So be prepared for my December trade signal, all right? Be prepared for my December trade signal. If you're not familiar with that series, go ahead and check out that playlist. Subscribe to the channel if you haven't, all right? And smash that like button if you've been enjoying the series so far, because I got a series for you, all right, down in my playlist that talks about the trade signals from before. So each month I do a trade signal. Get familiar with that lingo so you could be prepared again before these moves happen. That's what you see inside of this, all right? So the market is incredibly easy to move when you think this way, all right? Fewer eyes, fewer traders, less pushback. That's just the way these things can happen, all right? They're not really random. You get fake breakouts, you get fake moves. It's not random, guys. It's holiday behavior. Think about it. It's holiday behavior. All right. So this is a killer section here, because a lot of people who are trading right now, trust me, I know they're shorting the market, and you're going to get some pullback. All right. It's just due. We've been moving up for a couple of days. We are extended from the 21. So granted, we could fall back. All right, but we could get a bounce right here. 680 has to hold, and it might not hold, right? It might not hold, all right? But it's a lot of emotional trading. So we want to watch price to breach and then come fill back some of these gaps here, all right? Just to get a bounce here, the same way we possibly got here, all right? But we do have more gaps to the downside. 664, 662, all of these could be a magnet for price, all right? That's if we get down there, all right? This could be a breakout pullback, classic, all right? Price is breaking out right here, breaking over that, pull back to hold that 21. Now you want to see that 21 kind of hold it, right? Possibly, that's a possibility, but the market is closed tomorrow, and we won't be able to see the fruition of that until when? Friday and next week. That's what you want to think about. Now, I want you to walk away with this, all right? Let me walk you through how they actually survive this season. Clean zones only, all right? Clean zones only. Let's go to a smaller time frame. All right, we want to see this clearly. Okay. Clear this chart for you guys. Now listen, we're on the 15-minute time frame. Now, I want you to, now clearly, we could not get past these levels here before, all right? We kept rejecting. Got shorted here, got shorted there. It didn't get shorted here, did it? Nope. We broke above. That's your breakout trade, right? A breakout trade. If price continue to fall when you have 2 minutes left, breakout trade, breakout pullback. Wow, right here, because it's a breakout pullback zone is here because we broke out from here and we're resetting back there. But right now, with 2 minutes left in the market, we're still above the 21, right? We're still above the 21. All right, and if we can hold it, we could possibly trap them in, right? People taking a profit at the end of the day. But what do we have here on a high time frame? closing above the 21. Volume kicking in at the end of the day. Holiday shopping. Black Friday is coming up. All right. These things are really, really important. So I want you to remember that your clean zones, all right? Clean zones where price bounced from before and your line of symmetry. And you see it all over the place right here. Have a breaker structure here. All right. That was a parallel channel. As price broke down, we could have bought that. Why? It was a previous demand zone. Price got bought up here before. Okay. We've already touched these highs. We're breaking over them. So we might could be trying to retrace. Okay. You got to know your zones. Got to know your levels. The best risk to reward. Okay. The best risk to reward. And you even see the W shape here. No matter what time frame you're on, you see? You can always see it. How much money do you want to make? All right, that's number one. All right, cut your size. Cut your size if you're overly emotional about what you're doing. Period. I know that for a fact. Cut your size, all right? And you need to expect the sweep, all right? When you expect the sweep, it doesn't scare you when the market falls, all right? You got your predefined levels, your entry, your exit, and your risk, right? So you shouldn't be scared, all right? Moving up your stop. When traders start moving up they stop, when they already predefined, that lets me know that they really didn't take the risk serious. All right. So always predefine everything. Don't chase. You understand? All right. Listen, let me tell you something real. I learned this the hard way. 1 year right before Christmas, I chased the breakout thinking I could catch that Santa route. No stop, right? No breaks. Full size, no plan. Listen, that candle reversed so fast. I felt like the chart was personally offending me. All right, right where I enter that. You understand what I'm saying? And that loss taught me patience, as well as a couple other losses taught me patience. But that one itself, particularly trading Tesla, right, really hurt me, and it taught me discipline in order to really stick to my plan. I'm giving that to you now, so you don't have to learn it the way that I did. All right, predefining your risk, being a more mechanical and systematic trader takes away the emotion and the FOMO because it's a business, it's a system. You understand what I'm saying? All right. So I'm going to close out. All right. But I want you guys to see some commentary from Tom Lee and some of his cohorts to get a future picture of what's going on and some things you might want to know. All right. Listen, again, the market is showing strength, but we could get some pullbacks. So never chase. The market is closed now. Right. All right. And we got some market movers, and the monthly trading signal is going to be happening soon. Black Friday, quadruple witching coming up next month. So a lot of volatility drivers and data. All right. Holiday shopping. All right. Holiday spending, market moves. That's what you guys see in front of you. OK, Walmart. These stocks are booming. You understand what I'm saying? So you guys are going to be able to prepare for the Christmas rally as well. Whether we're trending up or trending down, we're going to be watching this chart like a hawk, because we want to know when these levels get reached, right? When these other levels get reached and they break these levels and we're looking to take our profit when everybody's chasing, we could break above here in these zones. We don't know, but we're going to be watching for the signals and we're going to be trading smart. All right. That's our plan. You get what I'm trying to tell you? All right, so listen, this is what we're going to do. I'm going to give you guys a moment to check out some of this commentary, and we're going to close out. All right, thank you guys for watching, checking out the Unique Trading Group, where discipline turns into income. All right, let's get it.
Wall Street Journal. His new book is out today. It's called The Man Who Solved the Market, How Jim Simons Launched the Quant Revolution.
And it is about Jim Simons. I think this is a really good thing for you guys to watch and be entertained. I talk about trapping in liquidity, retail and rookies who do not understand the real mechanics behind the market, and we simulate trades. It's math, it's symmetry. It's not about being right or wrong, guys. It's really deeper than what you may think. So I apologize for the misinterpretation with the Tom Lee reference. This is actually about Jim Simons, and I want you guys to get some insight on something a little bit deeper than what you may be used to, and then we're going to finish up. All right, so grab some popcorn, relax, kick back if you need to. Appreciate you guys watching.
And I read the article over the weekend and loved it. I think it's incredible to think about a guy who, when he was 40 years old, quit his profession, teaching math, turned around and launched in a strip mall on Long Island. How did he make it to these levels?
Yeah, it's kind of a crazy thing. You would think the greatest modern day moneymaker on Wall Street would be somebody who had some experience on Wall Street, and yet he's a complete outsider. Mathematician, was a code breaker, and as you suggest, for years struggled, tried to find the formula to make it in the market, finally turned the corner, and the rest is history. But there's a lot of kind of lessons there for kind of everybody, I think.
What kind of lessons?
Resilience, the importance of models as opposed to kind of intuition. Too often we get caught up in stories when it comes to stocks. We get caught up in things like Uber and WeWork and all kinds of Theranos. And by using a model, and you look at the best companies today, all kinds of Amazon, Netflix, Tencent, it's all models, and that's the Simon solution. By deferring to models and the scientific method, you don't fall for things like behavioral biases that we all kind of greed and fear kinds of problems.
Go ahead.
Just a quick question. As we've moved more towards passive investing, has he talked about how his ability to make better returns or worse returns has changed? Because
it's a really good question. So I've talked to people inside the firm about that, and it's a real problem or challenge, I'd say, if the market is changing. So the whole genius of Renaissance Technologies and Jim Simons is that there are patterns in the market that we humans don't really pick up on, and their machines do. They use unbelievable data. They got data that nobody else has, and they pipe it in, and they can use these models. But what happens if the behavior of the market changes? And we'll see going forward. For now, there are enough dentists and people like me trading the market that they take advantage of. But we'll see if everybody goes to passive, then the nature of the market could change.
What was interesting, when you say they find information nobody else has, I mean, they find information where, did they go back thousands of years to find some of these things? I thought that's what I read in the piece.
As far as back in the 1700s. Now, a lot of it is just kind of curiosity. They don't necessarily use
what
it day-to-day.
What markets were they looking at?
Commodity type
markets or
commodities, all kinds of, right. They're not the most liquid markets back then. But it can help if there's a curiosity within the firm. But for a long time, for decades, they had better and cleaner data and more data than anybody else. And it really is a huge advantage. And they were paying attention to these kind of things, the importance of big data, years before, like, Mark Zuckerberg was even finished with grade school.
So is it harder to compete now where everybody's doing big data and where computer speeds have just gotten so phenomenal? Big data is like the code word we've heard tossed around for the last several years.
Yeah, it's a good question. You would think, and yet they continue to outperform. They're doing a little bit better than the market this year. They've done better the last few years. But yeah, in the future, you wonder if they can keep it going. For now, they're still the preeminent investment firm going.
The other side of it is the tax efficiency of an investment like this for the average investor. I think one of the things that people don't understand is the turnover is so high that it's all short-term capital gains.
Yes, don't try this at home.
Yes.
The average holding period for these guys is about 2 days. So they're not high frequency, they're not kind of flash traders, and yet they're not the kind of things where if you're tax advantage, that's okay, but if you worry about taxes, that's not. They've done very creative things, and I write about it in the book, to shift from short-term gains to long-term gains, but the IRS has raised some questions, and we'll see if they have to pay back some of those profits.
You know, the whole idea of being able to game the system again is on other people not being able to catch up. And he's amazing in that he's continued to build this entire setup where he is doing just that. We've talked about 2 and 20, about how that can't last, but it can last for somebody who's actually getting massive outperformance. What does he think about hedge funds in general and who can do what he can do?
Yeah, no one really does what they do. So they don't really game the system as much as they look for patterns in the market that we all don't see. And there are a few day patterns. They could be shorter. They could be a little bit longer. But they're medium kind of term trading, as they call it.
I think of that as gaming the system just because you're smarter than what everybody else is doing. I don't mean to suggest there's anything wrong with it. You're just getting smarter than everybody else and finding a way to beat it.
Sure, for sure. And yeah, for the average sort of traditional investor who used to use an information advantage, I mean, one of the lessons from this story, I think, is how difficult it is for the traditional kind of investor to try to beat people like Jim Simons and other people with kind of the old traditional intuition, calling up companies, looking at balance sheets. There's more information out there that people can't digest as quickly as they used to, and you're competing with a guy like Jim Simons, who's a step ahead in terms of talent, too. I mean, they hired the best and the brightest from science, from mathematics. They don't even hire from Wall Street. It's a whole different way for organizing a firm and recruiting talent.
Did he ever talk about where he went wrong in any trades?
Oh, yeah, many. I mean, they don't do individual trades. Their idea is what they do that's different from others. They basically go 5,000 or so stocks long, 5,000 or so short. And they're doing trades that are relative to other things, relative to indexes, relative to the rest of the market, to other groups of stocks. And they've had a series of setbacks throughout the years, and I write about them in the book, especially 2007.
Have you ever seen where they get all the numbers in and Simons is there and there's the numbers, everything's figured out, it's all been plugged into the model, and someone says, so what do you think, Jim? What's your gut tell you on this one?
So the fascinating thing is that they themselves, as quants, they have to fight that instinct to some extent. So even last year, so Jim Simon's worth $23 billion. He is the preeminent quant, and the whole Wall Street is shifting to quant. 31% of all trading is quants. And yet last year, end of last year, the market was tanking. He's on vacation with his wife in Beverly Hills, sees the market going down, and he calls up his personal money manager and says, hey, shouldn't we be protecting here? Shouldn't we be shorting? So even after a lifetime, he's 81 years old. He's the king of this thing. Even he feels the kind of instincts that you and I do, right?
Seems like I wonder if that ever helps or hurts.
Well, they try not to override the system. Right. So, and they're scientists and mathematicians. They don't necessarily feel as emotional as you and I do. They're a kind of a different breed.
I feel no emotion. I don't know nothing.
Okay.
I feel nothing. I'm numb. I don't. I like over. No, but I like over time.
Then you can work for Renaissance Technologies and not worry about your instinct and intuition. Good. And too often that leads to problems. And that is their thesis, that if you defer to models and the scientific method, then you can outperform.
Greg, thank you very much.
All right, listen, guys, thanks for watching that commentary there about the guy Jim Simmons. Hope that was enjoyable. If you didn't catch anything and you wanted to go back, rewind the video, watch it over if you need to. Give yourself some grace. That's the point. All right, fam. So take this with you over the weekend. Don't let this holiday habits turn you into liquidity, even in your real life. Right? Try to keep that money in your pocket. Don't do too much, guys. All right? Stay focused. Stay patient. Trade clean. Trade smart. And remember, the market rewards discipline more than it does talent. It transfers money from the impatient to the patient. Always predefine your entry, your exit, and your risk before you take every trade. And today, if I brought you any value, tap that like button, man, and share this video with someone who needs these reminders. And subscribe so you don't miss the next drop. I'm Coach V. This is a Unique Trading Group. I'll catch you guys on the next one. All right? Peace.